Okay, good evening, guys. This is Ken at Tortoise Capital, the nightly strategy podcast for August 3rd, 2020. After I go through the market conditions and the daily report, I'm going to do some commentary on uh, every chart that was posted in Campfire today, in the workshop area, in the um, in the kata room, and in the main room. That's one chart. So I'm going to talk about one chart tonight. I had some questions asked of me. Could I cover a bar by bar examination of how I enter and how I manage stops? And the answer is going to be no, because I know how I do that. And what you need to be doing is working on those entries yourself and learning from those, and then posting your charts with commentary, and then I'll comment. Then I'll comment on them. But you watching me trade is not improving your technique. That's my current position. But yes, of course, I will show bar by bars. And then for the folks that asked me that question, I would say go back through the last 4 months of the daily strategy podcasts where there are bar by bar trade cases galore. But yes, I will continue to do bar by bars. The point is not to trade exactly the way I'm trading. It's to learn to trade these patterns the way that you trade them. All right, so let's see what we had today. So the market closed Friday after it had experienced a gap up, a harsh sell-off, and then a thunderous move, reversing intraday to close at the weekly high, within shooting distance of the 10-day and the 30-day high, which was just back here. And it went in, and this was on the basis of a very narrow strength in the technology sector. Everything else on Friday was lagging. And so I was concerned going into the day and over the weekend that if there was any vulnerability in the techs, then that whole market was at risk to come back and visit the dragon, the spine, the Z1, and then maybe even down to the 10-day low. But what we got instead was real belief in technology and a gap up and a strong directional move up to a new 10-day high and new 30-day high, right at the edge of that crucial 330. We said 330 was a very important psychological limit, and it got right to the edge of that and then sold off halfway back, but it closed with a white candle. It closed higher than it opened and stayed comfortably above not only the weekly high from Friday, but that gap also held, and there's a nice little buffer now between today's low of the day and the 10-day, 30-day high, the previous 10-day and 30-day high. So that's a nice little buffer of support, so that the move today held with a nice cushion to what was kind of a choppy roller coaster ride on the last 10 days. So I take that as a positive sign. The other indicators of favorable conditions for the long side is the 30-period regression line stretch is still very strong, pointing up. The RL90 briefly paused and is now sloping upwards. So I take that as a positive sign. We spent the entire day well above the Z1 line, and really in the northern half between Z1 and Z2. We're in the upper half of that, and it closed above that 30-period regression line. The RL10, even though that it turned into the fall because of this the sell-off moments, the RL10 is back to sloping upward, and the slope of the moving RL10 is up and positive. The dragon is strongly positive, and the PSAR continues to march north. So this was today's PSAR, and then tomorrow's PSAR stop will be here at 323, which is a full 2% away from the high of the day. So that's almost 2 ATRs just to the PSAR stop, and it's another 2 ATRs all the way down to the 10-day low. Now that 10-day low is going to stay in place for a while, at least 3 more days. And so this was really a favorable day today. There were plenty of reasons why it could be weak, and it rejected all of those, and it closed within just 0.25% off this swing high. So we are comfortably above that previous RL10. We cleared that completely. So downside support levels, low of the day at 327.76. The 10 period RL10 peak. So that's an important one that was broken through today. That's at 326.7. The RL10 price at 325.75. That's really the RL10 and the upper skin of the dragon is all located in that space. The Z1 line at 324.5. Bottom skin of the dragon, 323. So I consider that one to be strong support because that's co-located now with tomorrow's PSAR. So I see that as about that 2% cushion for the upside momentum. If that breaks, however, then the next stop doesn't really come into place until you get all the way down to the 10-day low at 319. So there's plenty of reasons why all of these should hold, and the market voted positively up today, so that's pretty good. Now the upside moves, if we just take today's move as a typical move up on a day when the market wants to do well, we would say it's about that big of a move. That was about a $3 move, about 1%, slightly less than an ATR in total range. The amount of net improvement was only 0.3 of the signal, so there's a big tail and a big tail relatively. So it was really kind of a minor upward move, but it's still in keeping with the general health of the 30-period regression line. So that was really right in line with the health of the strength of this trend. Today was a solid vote up. So if it can break through the high of the day, then the RL90 is in play here at 331, call it 331.5. And then the Z2 line at 332, that would be a significant move up if it could get to there and hold. So every reason to be optimistic about this market. Let's see what worked today. So the S&P finished up today at 0.7 to the upside. DIA was slightly better at 0.9. And then the Russell was up strong at 1.6. So this was a vote to the speculative traders in the Russell, and also a reinforcement of the large cap broad Dow 30 industrial. So there was a lot broader strength today than there has been in the past. Let's take a look at the sectors that were better than the S&P today, working our way up. Oil at 0.9, healthcare 1.0, oil exploration 1.11, Japan at 0.2 or 2 percentage points, technology at 2.46. Clean energy at 5%. And then all of the tech leaders were crushing it today. So we had, better than the S&P in tech land. We had Intel finally getting some traction there around 48 at 1.2%, I should say. Apple at 2.5 to add to their 10% from last week. That's pretty good. NVIDIA crushing Intel at 3.7. So this is the case where that pair trade between NVIDIA long and Intel short allows you to play the difference in relative performance. So in a pair trade, you might be short Intel because it's been lagging, but long NVIDIA, so you capture the interval between them. So you'd be net 2.6%. So even though you were short Intel, the long in NVIDIA would be strong enough that it carries the day. So this was a good day for tech, and Intel was better than the S&P, but it wasn't as good as the broad sector because the XLK sector was up 2.5 and Intel was only up 1.2. So it was lagging in terms of tech. So Apple 2.5, NVIDIA 3.7, Tesla 3.8, Microsoft 5.6, Virgin Galactic on strong earnings 7%, Nikola Motors 21.6%, and then in the battle of the leveraged tech, TQs were up 3.7, and that's really dominated by those very large caps. But then the broader sector, TECL, which is not as heavily cap weighted, was up 7%. So the broad tech sector today was better than the narrowly focused tech leaders in TQs. So in terms of placing your bets, that's a better way to go. Just as another comparison, TQQQ is 3 times the NASDAQ, and so that was 3.7, but just the straight S&P sector, unleveraged, was 2.4. So 3 times XLK gets you TECL. So in that battle of which segment of tech to bet on, right now it's voting towards the broader as opposed to the uber large caps that you find dominating TQQQ. Now, there was some other good news. So this was broader than just tech today, though. So Win was better at 0.9. Devon Energy, 1%. Nucor Steel, 2%. U.S. Steel, 3%. Cliff Natural Resources, 4.5%. Alcoa, 5.25%. So hat tip to Betty for taking us through the Alcoa swing trade. Now, everybody that listened to the webinar last night had a chance to hear us talk through 4 different angles on the Alcoa trade frame that Betty provided us. She did the work. We made the commentary. That trade paid off today. So as I tell my soccer players, if you come to practice and do the work, you're going to get better. And what that looks like in the chat room is posting trade frames and posting commentary, and then you're going to get actual feedback that's useful to you. You got to do the work. Virgin Galactic and Nikola, these are not tech leaders. They're speculative techs, but they really paid off as well. I was just pleased to see that Microsoft has finally gotten some traction here. Last week, it was all about Apple. In that pair of Apple and Microsoft, the old school tech leaders, Apple had been pulling away with its 10% gain on Friday and a 2.5% there. And Microsoft had been lagging. But today, Microsoft did the work. So that was the good news stories. Let's take a look at the things that underperformed today. So emerging markets and silver were slightly worse. Energy and finance, XLE and XLF respectively, were in the green, but they lagged the S&P considerably. So the S&P was up 0.7, but energy was only up 0.36. That makes the move in Devon Energy even better. And remember, we saw that happening last week as well. Devon was up on a day when energy was down. So this is people buying U.S. mid-cap energy solution provider, and that's a very well-run company. So that one deserves a continuation play attention. Twitter didn't participate. It was basically flat at a minus 0.03. Walmart at minus 0.08. So they were marking time. They have some catch up to do. Mexico down 0.12. Consumer discretionary and basic materials minus 2 and minus 5. Minus 0.2 and minus 0.5, I should say. So that makes the move in the metals, U.S. Steel, Nucor, Alcoa, and Cliff, even better because they were up decisively when the broad materials sector was negative 0.5. So that tells you that people are buying those companies on a fire sale. They're off like 40% from their 4-month high. And so those there's still room for them to continue to flourish. And I will be weighing those carefully on a risk-reward basis as a continuation play going forward. Google did not participate. So Google and Amazon did not participate in the upside today. And so when those two are down, that's what contributes to that lag in QQQ. Because they are such a large part of the Qs, they hold that tech index back. But the broad-based TECL, much like XLK, had a better day because all of the other tech plays were doing well. So Google, Amazon, and Facebook, I should also add, were lagging today. Treasuries were off 0.6. They're still hovering right around what for me is a key support level around 170. That one is the gateway to a real strong advance to 180. So 170 still it's in a critical state in my view. Amazon, Brazil, Simon Property Group down 2%, Wheaton Precious off 2.4, and then Kodak continues to get smashed. We talked about that last week, that it was just last week it was at 60 and it's now at 15. People buying it were at 60 were the Robinhood traders, the 125,000 Robinhood traders that were buying it because of reasons. Well, those guys are now looking at an 80% loss. Everybody who was buying it at 60, it's now down to 15. Now, that doesn't mean that it's not a good company and that there's a long-term value play in it if they can actually turn that $800 million line of credit, that loan. So they didn't just get that money to do nothing. They actually have to do something with it and prove that they can compete in a very low margin pharmaceutical manufacturing sector. But you got to think that we would throw good money after bad. So that first round of credit, we've got every reason to believe that could be followed up if needed, if they start showing any kind of progress. The government's not especially good at picking winners, but if they are persistent with it, then there's a way to make money in that sector. But Kodak down 31% today, and at 15, I'm now interested in it. It's at 80% fire sale, so now I'm interested in it, and I'll start framing it in that way. That's getting added to my speculative stack. So that's the quick rundown of the winners and losers today. Those of you that did not get a chance to listen to this weekend's set of videos, I think they're worth listening to. I posted the August index, starting that on Patreon now. So each time we do another nightly podcast, I'll be putting that in that consolidated list of videos for your convenience. I've got the interns working their way through that. Now, I would also tell you this. You've seen the work the interns are doing by putting together the Cornell note-taking sheets. That's how they're learning, and that's how they are improving their skills. Nothing stops you from joining that team by just picking a date and starting and producing your Cornell note sheet, and let people know what you found to be of value on that particular day. I'll get to that when I can, but my task stack, I've only got so much time to work on those things. And because I attended those sessions and I know what's in them, I feel like I've learned what I can learn from there. So I'm going to encourage you to participate with the interns. If you found their work to be of value, then that may be something that you want to take on as a way to start systematically working your way through it. I'd start with about 1 June, start working my way forward, because that's where I think we got some really good value in application. I want to talk about, I think it was Ken Hum's trade today. Where is that at? Yeah. So here's the SSC Challenge Week, the room for the kata, exclusively for supported spring crossing and supported fall crossing on DIA and EWZ, the basic blocking and tackling pattern that I believe is the gateway to how we trade, that hasn't been used for 12 days. If it's not important to you, then it's not important to me. So that's just how that goes. Like I'm not going to do the DIA and EWZ work if you're not going to do it. So that sounds like I'm being an asshole. So I apologize for the sound of that. But that's where the work gets done. I'll have to trim that out now. Family friendly. So here's this, I think, is Ken Hums. And here's his TNA. This is the triple leveraged Russell. This is basically the same trade that I took in Microsoft today. And here's his entry, right by the numbers. This is a tech leader that has a temporary harsh sell-off in the early morning to just a fraction below the VWAP. It gapped up strong, sold off this little marginal distance below the VWAP, gives you a nice orderly supported spring crossing. He buys it just like you're supposed to when the PSAR flips. He uses the Wu Wei exit, so he keeps that initial stop in place until the PSAR gets 3 dots or 4 dots above the entry. He then jumps the sniper to the PSAR and keeps it in place until the Bollinger Band mean catches up. And then he picks the Bollinger Band mean. And then when he sees a sniper exit opportunity to exit the PSAR, he knocks it out of the park and he collects 3.5 R. He tries a resumption pattern. He cuts it off quick when it doesn't work. He waits for the next supported spring crossing. It doesn't really work because it's into the lunch period, and he scratches that and trades 2 and 3, cancel each other out basically, and he walks home with more than 3 R for the day. Perfectly played, right by the numbers, nothing mysterious, basic blocking and tackling. That's how you do it. Let me see. There were no other charts to comment on, so I'm gonna go straight to the daily report. Okay, so here's the daily report for August 3rd, and we've seen the market health check already. So today was just a clear vote upwards. And let's see, review. Yeah, that's what I want, review and shapes. Okay, so we're still solidly into bullish normal conditions, favoring swing trades. Everything is decisively overbought on every time frame. Full speed ahead. At 7.91%, that's almost 8%. That puts us daggone near 6% above the sideways market condition. And with a ATR percentage of 1.16, that means that's almost that's 5 ATRs above sideways. So that's a strong vote up. The risk Z, or the risk index, is at 1.119. That has a risk Z score of 1.01, so it's still abnormally strong. And you see that little rolling over action there. That says, yeah, it's possible for sharp moves to the downside, but this still is favoring the long side swing trades, so we can start taking more of those. I'm still going to give you the advice to start with turbo trades and then hold a piece of that in the overnight. Griff asks the question, says, hey, I'm now trading SSC and the DIA using his adjusted rule set. Don't post those in the challenge room because they're not strictly kata. Just post them in the main room. That's what the main room is for, is to post trades the way you trade them. The kata room is for people that are learning how to master the kata strictly by the numbers, just using EWZ and DIA. That way it stays very clean and pure and strict. But trading your rule set the way that you've adapted them, that's what the main room is for. And that's where you'll get the feedback, and others can see how you've adapted the kata. That way we keep the kata room clean and fresh. Okay. So that's the risk Z. Now only ILF is below its 200. Oh, I'm sorry, EPP is too. EPP and ILF are still the only ones that are below their 200-day moving average. Everything else is above. There were no signals for channeling or overreaction, and that's not unusual because you had a gap up and a strong finish. And both of those mechanical swing trade systems, high reliability, they both require a pullback from a high that creates the opportunity to play the resumption. When you have a breakout like it was today, that's just not really there. Looking at the max pains and min pains, these were the winners today. Microsoft, Procter & Gamble, Walgreens, Home Depot. There's Home Depot again. That one is just quietly getting it done. And Microsoft finally joined the party by now starting to outperform. The 10-day max pain, these are the ones that are still showing plenty of room to play catch up. Intel started well today, but there's more room for it to go. Boeing, Chevron, 3M, and Goldman Sachs. And then in the S&P 100, Intel, General Electric, ConocoPhillips, and Boeing. So there's some energy plays like Chevron and Conoco and XLE, the sector itself. A goodly number of dojis today, so 6 dojis among the Dow 30. Now this is what I like when I see something stacked up here like Alcoa. So I want you to just, not Alcoa, I'm sorry, Intel. Getting ahead of myself. So Intel was a doji today. That's good because that means there was literally no selling pressure that it could catch fire. Now there wasn't a lot of buying pressure to make it a runaway upside fire sale, but that's what that first step out of the hole looks like. Is it a positive move? It's a max pain candidate. It's 13.4 to 1 on the reward to risk ratio to the upside. Now that's a good thing. The next best one is Chevron, and that's 5 to 1, but a 13 to 1 in Intel is kind of low risk money. And you notice that on the 10-day, 1 month, and 3 months, it's in the red, meaning that it had underperformed the other members of the Dow more than one standard deviation. So it was really bad. The only things that were even close to being that bad really was Boeing and ExxonMobil. That's how bad Intel has been. Down 20% over the last 10 days. The greatest chip manufacturer in history on a 20% fire sale over the last 10 days. That has to be interesting. Now, maybe they're not as good as NVIDIA, and they got to figure out what they're going to be. Like, they're reinventing themselves. They were doing both design and manufacturing, and they made a policy decision last week to become just a design shop. So they're going to try to narrow their focus and try to create value out of the highest margin portion of their business and offload the manufacturing to others. Long term, probably a good idea. To specialize in what really creates value. Let's see here. Let's see what else we can see that's of interest. Now, in general, I look at this RSI2, and anything that's highlighted in the green, those single digits, these are companies that have experienced like a 2-day maximum sell-off period. So when I come over here and look at those elements, I'm looking at DuPont, which was a big percent loser today. So it's down 2.5% and has an RSI2 value of 8. That means there was really strong selling for like 2 days in a row. And that's not good. So that could be an overreaction in DuPont Chemical. And So that's an area, that's a non-metals portion of basic materials that might be ready to do something. So then I come down to look at 3M. So 3M is 5.4 to 1 on the auto framer, and it has an RSI 2 value of 9. So that feels interesting. It has a big, strong frog quality number of 3.1. That's good. What that says is that if you're using a fraction of the frog box, the average move is going to give you large multiples. That makes it a good candidate for hybrid frog trading. Anytime you got a frog quality number better than 3, it's certainly a candidate for hybrid frog trading right from the opening. Moving further down, I'm looking at, I see Caterpillar has a RSI 2 value of 9. It has a 4 to 1 reward to risk ratio. It's also firing on channeling, overreaction, and as a doji. That's so good that it makes me want to go look at them. Let's see if TC2000 wants to cooperate. And I think it does. Let's see if we can find CAT in here. And take a look at what a nice swing trade, a combination of swing trade indicators looks like. So let's fire up Caterpillar here. Loving it. So when I look at Caterpillar in this kind of condition, I see that it had this almost like a triple top up in here. And that looks like the trading range. So there's something strong about 140 to the upside, that there's every reason to believe that this rascal can get to 140. And if I just kind of look at the last 10 days, now I see we have this kind of, call that the trading range. And now I look at today as an inside day where it failed to fail further. So it looks like the Bollinger Band mean held. And there's some downside, but if this acts as a support level right in here, now with the very small risk, even if I did something like a 1-day risk box, it's 3 risk boxes, I would say, back up to the top skin of the dragon. So there's our potential reward, and that's not even an outrageous kind of a move. It's probably 5 up to that, to that 10-day high. So if we just did that, there's probably 5 units of daily risk and reward there to the upside just to go test 140 or 141. So I see 5, and all I really have to get are these here in the middle. So these look like potential moves to me. So if I could just get a couple of those, I'd be pretty happy. So just playing the upside move to the, to test the top of the dragon. If I could get that as my third box, it doesn't have to get all the way to the 10-day high for me to have favorable gains. And all I'm really risking is today's range. And then on the other hand, if it does fail, then so if that 130 fails, then I can be looking down here to the Z-1, and now here's the opportunity on the downside. So any breakout, if you just did, if you treated it like that as the risk box, but really I'd like to get short, just short of at the low of the day. Then if it breaks the 10-day low, I can add a second position at 130 even. So I could be short at 131, add a second position at 130, and then I get two positions as I'm looking for a return to to Z -1. Then if that breaks, then you've got some real possibilities. Over here, as we look down to like the 30-day low and the previous RL 270, or just call that a move to Z2. So there's some real nice potentials here in a critical state in a great American company. Nothing wrong with that. If I take that same kind of swing trade approach with Intel, well, this looks very favorable to me. Let me close that down a little bit. So now what we have is this price action here has bottomed out at about 47, and I don't know that that's the low at 47, but it could be. And if it were, then a breakout above today's little doji action gets us right back into that previous box. Then if it can get above 51, then we've got this long haul all the way back to the Bollinger Band mean. So that's what kind of bottoming action looks like. A big gap down, a 5-day sell-off. You saw the swing low, and now you have a 1, 2. So that the big this price with the red dot on it is bar 1. This is now bar 2. So all bar 3 has to do for this to be a 1, 2, 3 entry, which I will take tomorrow, is that it has to take out today's high without making a new low. So I would really love to see it open inside today's range. And so let's call that the yellow zone. Come on, Kenneth. Let's just call that the yellow zone. And now I'm ready to trade that north. If it gets above 49.50, which is that next big block, that big box right there, if it can get above that, then I'm not going to lose money on that trade. So I'm looking to get long at 48.50 with about 47 as my risk. So $1.50. That's about, let's see, 1%. That's like a 3% stop. That's certainly tradable. So I'm liking Intel here. That's a low risk catfish style entry in my view. Okay. So back to our regularly scheduled program. What did Microsoft look like today? Yeah, that's what a large directional move looks like. So even though I don't get the gap, you can tell by inspection that this is going to be a wonderful hybrid frog move to the upside. A 3.5% intraday move. And what's nice is it completely closed above the previous 30-day high. So I'm expecting some more follow through on that rascal. Okay. So that was we were just looking at Caterpillar as at RSI2. Now here's another. Now Walmart is another one. So it's not sexy. It's a non-tech, but it closed with an RSI2 value of 5, and it was down. It was basically flat for the day, down a fraction. So what does Walmart look like? Well, everybody else is chasing tech. Is this a candidate for some kind of recycling? Yeah, this is even easier to believe in. This has that same kind of that 1, 2, 3 turnaround. We've seen this dot here under the orange ball. That's bar number 1. That makes this bar number 2 because it took out yesterday's high, Friday's high, and it had a higher low. So that there's 2 reasons to believe in it. So now, if it can take out today's high, then I can trade that with a 1 day's worth of risk. And then the upside looks like just a test of the 10-day high or just to the PSAR. That's what my reward looks like. And then this is what my risk looks like. But if today's low failed, would I be willing to go short? Absolutely, I would, because the last 10 days have been down, and this has gone from summer into the fall. It's already below the dragon. The dragon has rolled over. The PSAR has flipped. So that's an automatic short. Now, what I want to see is the market selling off, but Walmart doing worse. Then that becomes a short. And now notice how the RL90 has started to just roll over. So if this thing starts to fail, the targets to the downside are the Bollinger Band mean, the RL270, the 30-day low, and then back into this sideways cluster at Z1. So the downside of this thing is realistically at about 121, and that gives you about $8 of downside risk against $1.50 of range risk. So that's 5-1 just down to Z minus 1. And there's probably 2-1 on the upside. So that's a critical state forming in Walmart. So if the market started to fail, you wouldn't want to just automatically stop and reverse with technology, because technology is what leads this thing out of the gutter. And people are going to be wanting to buy technology. So it stands to reason technology is not going to lead the market downward. How could it? Well, it could if people were suddenly in a panic to sell to lock in all their profits. I suppose that could happen. But the easier way to trade that is to take a look at the sectors that are already weak and are getting ready to suffer during an economic downturn. What's the economic downturn? Well, how about this? How about no protection of the unemployment insurance, the moratorium on rent foreclosures is over, and that means there's 10 million Americans without jobs that are looking at possibly getting foreclosed unless both political parties can come together to do the right thing. What's my confidence that they will do that in the time of a political crisis when they can blame the other side for not getting a deal done and people will believe them? There's little chance of getting a deal done, in my view, compared to their tolerance for our pain is very high. They don't feel our pain. So they're willing to use our pain to achieve tactical political victories. That's one way to interpret the way that we've been handling this response to the pandemic. Hey, we just decided to move army troops out of Germany and into Poland in order to raise the tension level with another global nuclear power, at the same time pissing off our long-term ally in Germany. We're willing to do that at a time of pandemic crisis and spend the money to do that, but we're not willing to take care of pensions, health care, unemployment insurance, and rent protection. So you tell me how serious people are in Washington with trying to get this stuff done in a sensible, productive way. I don't see it. So I'm really mindful of the possibility of downsides. I hope I'm wrong. I'm not going to let my political bias point me in one direction or the other. I'm just aware of the different variables that could lead to sharp moves in either direction. So this market is still in a critical state. I still have a belief that the downside sharp moves are more likely than the upside. I was proven wrong again today. But as I said on Friday, I'm not carrying a lot of swing trade positions overnight, and especially not over the weekend, because that could just as easily have been a 3% downside gap. So I'm perfectly happy to have taken my core position offline, to reduce the amount of swing trades that I'm holding, and only those swing trades that are paid for with market's money, and concentrating on the intraday kinds of moves that are readily available. So here's one in Microsoft. when we look at today's move. There's a supported spring crossing in here. After the gap up, you get that harsh sell-off, 2 legs down into a harsh winter. That's what a harsh winter looks like. And in fact, there's actually short side trades available in here if you are also playing supported fall crossing. Those are trades that you wouldn't lose money on. Here's a supported fall crossing that you wouldn't lose money on. You might scratch. Here's a supported spring crossing that you could make money. Here's a supported fall crossing. You could make money. But the big deal of the day is now what happens when you get this next supported spring crossing. Come on, Kenneth, work. Ah. So this is the next supported spring crossing that takes you all the way up to the Bollinger Band mean exit. And that's why you keep taking those shots. That one gives you probably 3R up to that one, with an opportunity to add a position in the mix. Let's see if we can get Brazil to cooperate here. Brazil, on the other hand, gives you multiple goodies. There's 3 giant legs. This is why Brazil is such an amazing trading instrument, in my view. There's a ginormous leg move down, traded in the usual way. The mirror image trade, taken it the other way. And then exactly the same move again on the downside. And those are all 50-cent moves on a $30 stock. That's a 2% intraday move 3 times in a row within 2 hours. And if you just follow the kata rules and modify the kata rules so that they fit you, you're very happy with that trade on the kata symbol. And that's not even the easiest ones of the day. Standard play. You have a higher low standard play. You won't lose money on that one. And then you have a Z3 pinch breakout and you make money on that one. So there were legitimately 6 opportunities to trade our 2 basic standard plays in our standard EWZ using the kata or a reasonable adapted form of that. So the money is there waiting to be traded. The trades are there waiting to be traded. That's everything I want to cover on those intraday trades. So back to the daily report. So we've seen Walmart. I then come down and take now Coca-Cola. This is a 5-day down. It was a percent loser for the day. It has a frog quality number of 3.3. So that makes it a good candidate for hybrid frog action. The hybrid frog box on this is 20 cents. How do I know that? Because it says so right there on the report. I just look at the intersection there of those. The hybrid frog box is 20 cents. And then look at the range stat. The range stat on this thing is $1.20. So that means that you could, from the open, wherever it opens, there's the potential for $1.20 move in either direction that day. It's baked into the cake. So it's a 5-day down. Let's go take a look at Coca-Cola as a candidate for intraday. So these are just symbols that it's possible to specialize in if you don't like the volatility of technology, because there's so much, directional anxiety and lack of follow through. Maybe you could say you take the opposite of a technology company. Now, I would argue Coca-Cola is a technology company, but that they're using. Now, this is what I mean by being a good candidate for a hybrid frog trade with 20 cents. Look at this move in just from today in Coca-Cola, where it opens near the high of the day. Dang it, get this cleaned up a little bit. Here's what a 20-cent risk box looks like. So there's the high of the day, and it rolls over fast. So it's moved a hybrid frog off the top. And if you said, well, let me track another hybrid frog. So the full frog box is about that much. If you just tracked a hybrid frog box from the high of the day, you notice that now suddenly it now broke below yesterday's VWAP, and this feels exactly like a hybrid frog short, and it does nothing but run straight down in the first 20 minutes of the day from 47.10 down to a low of 46.35. So that's a 80-cent move on a 20-cent risk. There's 4R, and you could certainly call that a harsh winter. And then you would say, oh, after a harsh winter, there's my supported spring crossing. And there's 3 execution R's to the top. And if you take your sniper exit, you wouldn't be crazy if you took the sniper exit. And even if you took the manager's exit, you're still okay. So technology is not the only thing that's going on in here. There's other companies which set up for situational interest. And so this is how you get the most value out of this, reading this daily report. So those were the 5 symbols that had the greatest 2-day washout. Now, why are those interesting? Well, because the last 2 days have featured these enormous intraday moves up inside the tech sector. But there's other companies that are not participating in that. So let me paint this scenario for you. What if the market decided to start selling off? And what if technology wasn't there to prop it up? What do you think would be the likely candidates for big failure moves? How about the ones that just put in 2 days worth of panic selling? So all 5 of those: Dow Chemical, 3M, Walmart, Coca-Cola, Caterpillar, each one of those has the potential for getting smashed if the market started selling off, because people are already losing faith in them. That's why they didn't participate in the upside. So there's plenty of goodies out there for us to frame low risk swing trades and then zero in on the turbo trades in the same way that Betty showed us with Alcoa. So actually, I wanted to show that one, because Alcoa, I mean, that's the first 2 hours in Alcoa, or 2.5 hours in Alcoa. Alcoa closed here, Here's your move off the low of the day and a Z3 pinch breakout. Buying it. And if you wanted to be technical and say I'm going to use the PSAR break, that's a 10-cent risk with an entry at 13.10, and it goes to 13.70, really 13.70. So there's 6 execution hours before it even touches the Bollinger Band mean. And it wouldn't surprise me if you had decided to add a position here when the this little sell-off, after it peaked and it came back, it only even got to the PSAR and held support, never even flipped. And that's the same kind of risk box that you had down here, identical, and then breaks out again. So even if you cash this position here, then you re-enter here, and then you get this second leg up. But if you didn't cash that position, you were just trusting the Wu Wei exit. The Wu Wei exit looks like this. It's here, moves up to the PSAR. Let me try to draw that now. When it gets 3 bars above, moves to the PSAR. Keeps the PSAR until the Bollinger Band mean picks it up. And then the Bollinger Band mean tracks it all the way up to there. That's basic blocking and tackling. All right. I've been a big enough jerk tonight, so I apologize for any harsh sounding intent. But we got to do the work. You got to get in the weight room and push metal around. You got to do the work. So rebuild your spirit, take a deep breath, let it out, relax, and just commit to it. Pick up your tools, get your quality raw materials, go to the workshop, a few minutes early, get your mind right, clear your workspace, get ready to work, and then just trade your plan. So plan your trade, then trade your plan, and attend to the work as you understand it, as you see it, as you document it, and then study your effort and figure out what you can do better. Then and only then are you in a position to say, hey, how would you do this? Or how have other people done that? If you want to actually get the benefit of feedback, it's because you've given yourself feedback on the work that you're doing. That there's no shortcut. Wisdom is not received. It is earned through effort. So that's just the truth as I see it. All right. That's everything I got for you tonight. I apologize for being a jerk tonight. But, that's my badger nature, my Wolverine nature. Okay. Hey, if I was mad at you, you'd know it. Like, this is not me being mad. This is my form of a pep talk to the team. If I was mad at you, you'd know it. You've never seen me mad. So take good care, guys. Keep the faith. Build your energy. Build your emotional resilience. Do what must be done. Remember what's pulling you forward. Right? Remember, there's goals and objectives out there that matter to you, that are worth working for. And there's things that you want to leave behind, that you want to drop off, that you want to stop doing to make your load lighter. Just get rid of it today. Get rid of that baggage today. There's no better day than today to start making that change for the future. It's like compound interest. It doesn't get any easier than starting today. So take good care, guys. And I'm going to try to live up to my own guidance by doing better. Okay? Take good care. Good to see you, Van. Take care. Moving to residence, that's always a lot of fun. It's like that's like transplanting plants from your vegetable garden. It briefs really well, but there's we still got to take care when we do that. So be kind, take good care.